Hello dear CMA aspirants from South India. As you all already know, Akash Agarwal Classes has launched for you all 100% English lectures in English for CMA Foundation students giving their examination in December 2025 and onwards. So here I am going to tell you how do you enroll in the batch. You just have to join our WhatsApp community, which is given in the link. Fill up the Google form again given in the link, and to download our mobile application Akash Agarwal Classes to access the notes. You all know the lectures which we are going to conduct will be 100% covered. There would be no subject which we are not taking care of. So we are going to take care of each and every subject, each and every concept. We are going to take MCQs for you. We are going to provide test papers. We are going to take live mentee sessions as well. Lectures which we are going to take for you all are 100% recorded lectures and not dubbed lectures. And you all know we have exclusive team ready for you all to teach you for your CMA Foundation December 2025 attempt for subject wise as well. And we are uploading the lectures on a weekly basis. All the important links which will be useful to you all are uploaded in the description box. Since we have many students who have cleared CMA examination at all the levels from Akash Agarwal Classes, and to reciprocate the love which we have received from South Indian students, we are here for you all taking lectures 100% in English, so that we can clear your CMA Foundation December 25 attempt together. So keep studying, do watch all the lectures till the end, and do show some love by liking the video, subscribing to the channel, and putting up a word in the comment box. Keep studying. Bye-bye.
Hello everyone, good evening. How's everybody? Today we are going to cover a new topic. The name of the topic is Capital and Revenue Transaction. In the previous lectures, we have covered with the 4 frameworks of accounting, and then we have covered with the basic concepts, principles and conventions. I hope so everybody has been watched the lectures, because the lecture will be very beneficial, because in the first 2 topics, that is 1.1 and 1.2, frameworks of accounting and basic concepts, it will be approximately carrying 8 marks weightage in your exams. 2 questions from first unit and second 2 questions from the second unit. It will be very beneficial for you all. Do watch the lectures if you have not yet watched. So we will be starting today with the topic known as Capital and Revenue Transaction. This topic is also very important from the point of view of foundation as well as, and from the point of view of inter also, because in this topic you have to bifurcate, you have to distribute the transaction to 2 things, that is capital transactions and that is revenue transaction. It will be also carrying 2 to 4 marks in your exams, and this topic is also in the intermediate group 1 syllabus. It will be also carrying there also a good weightage of 5 marks, 6 marks, 7 marks. So don't miss the topic. Let's start. Firstly, what do you mean by transaction? Concepts of transaction. Accounting is all about recording of transaction in the books of account of an organization in order to determine 2 things that we have studied in the earlier lecture, that is financial performance and second one is financial position. We have to get the knowledge of 2 things, that is financial performance as well as financial statements at regular periodical interval. It means that every 12 months we have to prepare our financial statements for our financial performance as well as financial position. Or transaction as an event which can be expressed in terms of monetary terms and bring the changes in the position of business unit. For example, investing a capital in the business, purchasing goods for resale, paying remuneration to the employees are all transaction, and this will lead. What do you mean by transaction? A transaction means it will be value in terms of money and it will be change your financial position. Example, you have invested money in your business, you have paid salary to your employees, you have purchased some goods, you have purchased some asset. All these are transaction, and these lead to change in the financial position of an organization. Now, on the other hand, using a new material in production, appointment of a new manager, are only event as they does not change the financial position of the entity. Very, very, very important. If I appoint a new manager, it will does not amount to change in the financial position. Very, very, very important. Now, why capital revenue transaction, sir? Why there is distinction between capital and revenue transaction? Appropriate distinction between capital and revenue transaction should be made because of certain reason. The first basic reason is to know the correct profit of the business organization. For an enterprise, to know the correct profit of business enterprise, you must have a distinction between capital and revenue transaction. Appropriate distinction between capital and revenue transaction lies that core of accounting and helps in achieving its objectives as stated above. When transactions are appropriately classified into revenue as well as capital, it serves a number of purposes as follows. The first one, this distinction ensures proper accounting of transaction by identifying them as an income or liability or expense or asset. It means that due to capital revenue transaction, you can have a distinction between what revenue transaction, capital transaction, as well as assets, liabilities, income, as well as capital. Asset, income, expense, asset, liability, income. The fourth distinction is done because of capital revenue. If there is no distinction between capital revenue, it will be very difficult for us to find out the expense of the business, income of the business, the assets of the business, as well as the liability of the business. It helps in determining the profitability of the operations. We cannot find correct profit. For example, if you have purchased an asset and you have recorded it is an expense. For example, you have purchased a machinery. You have recorded in the profit and loss account machine as an expense. It will be directly impacting your profit, and the profit of current year will be going down. That is the reason what you have to do. You have to make a proper distinction between capital and revenue to find out the correct profit, as well as it facilitates the assessing the financial state of affairs through correct identification of assets and liability. It means that when we make a distinction between capital and revenue transactions, at that time, what we have to do, we have to classify assets as assets and liabilities. From that only we can know the financial position of the business. There are three important points for which we have to make a distinction between capital and revenue. Firstly, we cannot identify it is an income, expense, asset or liability if there is no bifurcation between capital and revenue. Second thing, to find out the profit, and third important, to know the assets and liabilities of the business. Now there are two transactions. There are firstly capital transaction and revenue. Now we will be doing both the things, capital expenditure, revenue expenditure, as well as capital receipt, revenue receipt. We will be doing everything. Firstly, I will be explaining you capital transaction are transaction having long-term effect. It means that all the capital transaction will have a long-term effect. You have purchased your mobile phone. You are watching the lectures. You are watching lectures of Akash Agarwal classes from your mobile phone. The expenditure for mobile phone is only once. So it is a capital expenditure. But you have to recharge your phone every 28 days. After every 28 days or after every 56 days or after every 84 days, you have to make a recharge on your mobile phone. It means that it is a revenue transaction which will be having long-term effect. It will be a capital transaction which have short-term effect. It will be having revenue transaction. While revenue transaction are transaction having short-term effect. Each of these transactions can be again be either receipt or expenditure. So firstly, we will be going on capital expenditure. What do you mean by capital expenditure? Any expenditure you have done in the business for earning income and for long-term benefit. For example, I have purchased a laptop, I have purchased a desktop, I have purchased a camera for recording purpose. So all this will be capital transaction because I will be not regularly purchasing these things. it will be giving me a long-term impact, long-term effect. It is known as capital expenditure. Capital expenditure refers to that expenditure from which benefit can be enjoyed by an entity over the number of accounting periods. This types of expenditure happens non-recurring in nature. It is a point of MCQ. Capital expenditure is which? Short-term or long-term? Long-term. It is which? Recurring or non-recurring? It is recurring. Or non-recurring? Non-recurring. A capital expenditure takes place when an asset or services is acquired or improvement of fixed assets is affected. Example. I will be giving an example to you. Just concentrate on the given example. Again, I have also told in the previous lecture also, we are more comfortable with Hindi, but due to the love of South Indian students, we are conducting the lectures in 100% English. So there might be some errors in our vocabulary, our grammar. So kindly ignore the same and focus on your study because your results matters the most. Many students of our Akash Agarwal classes have scored a very good marks in foundation, inter and final. So you can be also one of them. Here are the All India rankers of June 25 attempts, and many students have scored a very good marks. So you can also get the benefit of the same because Akash Agarwal classes is the #1 coaching institute for all over India exclusively for CMA. We are exclusively for CMA. Our lectures, our content, our notes, our MCQs, everything is for only CMA students. So it will be definitely helping you to clear your exams with a very good marks. Over here now, for example, I have one building. It is of first floor, second floor. I have one building of 2 floors. I want to extend it one more floor, that is third floor. If I do so, I will be getting an additional rent of rupees 50,000 rupees every month. Now I have 2 floors, first floor and second floor. Now I want to extend one more floor, that is third floor. If I do so, I will be getting a revenue of 50,000 every month. It means that 6 lakh rupees per annum. I will be incurring rupees, for example, 10 lakh rupees for the same. So this 10 lakh rupees expenses will be my capital expenses because it will be increasing my earning capacity. Now I have only 2 floors. Now we will be having 3 floors. So it will be increasing my earning capacity. That's why 10 lakh will be your capital expenditure, and the income you generate afterward, that is 50,000 per month, will be your revenue wala part. I think so. You have clear with this. The asset resulting such expenditure are not intended for resale. Very important. Whenever you do a capital expenditure, you have no intention of reselling it. It means that when you purchase a motor vehicle, so when you purchase a motor vehicle, there is no intention of reselling it. In the ordinary course of business, it is known as capital expenditure. A capital expenditure has the following characteristics. The amount involved in such expenditure is generally large. The benefit acquiring from such expenditure is consumed over more than one accounting period. It will be giving benefit for more than one accounting period. These expenditure are non-recurring in nature. It results in increase in the value of fixed asset. It will be increasing the value of fixed asset. Examples of capital expenditure are purchase of machinery, construction of plant, significant repairs to a fixed asset or a non-current asset significantly increases its life, etc. It means that if you have made any capital transaction, it will be increasing the life of the asset. Example over here. I have purchased a printer. The capacity of printer is 50,000 print. I have called an engineer. The engineer has given me a suggestion that change this spare part. It will be amounting to an expense of rupees 30,000 rupees, but the capacity of the printer will be 1 lakh. Here what happened? The capacity of the printer is to print 50,000 print. The engineer has suggested me to make an additional expense of 30,000, due to which the capacity will be how much? 10 1 lakh prints. So here the expenditure which I've made on the non-current asset have give me increase in the earning capacity or increases the life of the asset. It is known as capital expenditure. Revenue expenditure refers to that expenditure benefit for which can be enjoyed by an entity in the current accounting period. It means that here the benefit will be only for the current period and not for the next period. For example, you have paid salaries to the employees, you have made some repairing expenses, you have do the expenses for printing and stationery, you have do the expenses for electricity charges, all those expenses, purchases, sales, all this, sales will be income, but purchases, all this will be a revenue expenditure. This type of expenditure happens to be recurring in nature. Revenue expenditure to carry on regular course of operation by an organization. A revenue expenditure has following characteristics. The amount involved in such expenditure is generally small. The benefit acquiring from such expenditure is consumed within one accounting period. The expenditure is recurring in nature. It is incurred in relation with trading activities, that is purchase or sale or providing services. For example, we provide study material to our students. That is our revenue expenditure, because this expenditure we have to do multiple times. It is recurring in nature. It is not non-recurring in nature. Examples of revenue expenditure includes goods purchased for resale, payment of salary, rent, regular maintenance of fixed asset. Accounting treatment. What is the accounting treatment for capital and revenue? Here is very simple. Capital expenditure is not write off immediately. It should be shown, and that is charged against the income in the accounting period in which it is acquired. Rather, it is capitalized, that is recorded as an asset in the balance sheet. It means that capital expenditure are shown in the balance sheet. However, over the time of the amount of the capital expenditure is recognized as revenue expenditure. We know that. We have studied the chapter of depreciation. We have to depreciate the value of the asset due to wear and tear, due to physical deterioration, due to obsolescence, change in the technology. It gets gradually charged against the profit in a systematic manner, reflecting the benefit consumed out of it. For example, the acquisition of machinery is a capital expenditure, but charging depreciation on the machine is a revenue expenditure. We have just now discussed the same. When you purchase an asset, it will be a capital expenditure, but when you use the asset and you charge depreciation to profit and loss, it will be a which expenditure? Revenue expenditure. Basic. An expenditure of revenue nature charged as an expense against profit of the accounting period in which it is incurred or recognized. Very, very, very important. Distinction between capital and revenue. Over the period of time, you have to read this will be homework for you. The points we have discussed above, the same are over here. You have to read the distinction between capital and revenue transactions. Don't miss it. Now, rules for determining capital expenditure. An expenditure can be recognized as capital if it is incurred for these following purposes. The first one, any expenditure you have done for purpose of acquiring long-term asset whose usefulness will be giving for 3 years, 5 years, 8 years, 10 years to the organization, and for the purpose of earning profit not meant for resale, it will be telling which expenditure? Capital expenditure. Any more examples? You have to read the paragraph. It will be explaining in detail. What happened? If I have purchased a motor car, I have purchased a second-hand motor car and I have made certain repairs on the same. For example, I have purchased motor car for 50,000. I know that I have to make more 10,000 expenses to bring the motor car into the working condition. So the cost of the asset will be 50,000 plus 10,000, that is 60,000. And this expenditure will be capital expenditure. But I am a dealer of second-hand motor car. I basically purchase and sell second-hand motor car. Over here, when I purchase the asset, the motor car, it is for the purpose of resale. It will be not a capital expenditure. It will be a revenue expenditure. The first point is this only. When the expenditure is incurred to improve the present condition of machine. Sir, present condition of machine, it means that it will be a capital expenditure. I have a machine which is producing this water bottle. I have a machine which is producing this water bottle. So I have made some expenses which have improved the working condition or present condition of asset, or it has been increased the earning capacity or useful life of the asset. For example, the machine useful life was 5 years. After using for 2 years, the remaining useful life is 3 years. I have made some expenditure due to which the asset life is more 4 years. So the increase in the useful life of the asset, it is also a capital expenditure. I think so it will be very, very, very simple for you all. Oh yeah. Here is an example. Example, if one buys a machine for 5 lakh and pays 20,000 for expenses as transportation charges and 40,000 for installation, the cost of the machine is 5 lakh 60,000. Similarly, if a building is purchased for 1 lakh and 5,000 is spent on registration and stamp duty, the total price of the building will be 1 lakh 5,000. If an expenditure is incurred for increasing the earning capacity, I have given the example of floors, first floor, second floor and third floor. One more example is there. I have a multiplex theater, cinema hall. I have a multiplex theater, cinema hall in which the capacity is 100 people. I have made some expenditure due to which the seating capacity is increased from 100 to 150 here. I have increased the seating capacity due to which I can sell more tickets and generate more revenue. It will be increasing my earning capacity. It will be a which expenditure? Capital expenditure. Earlier in a cinema room, I can only show movie to 100 people. Now I can show the movie to 150 people. It has increased my earning capacity. It will be a capital expenditure. Preliminary expenses incurred before the commence of business is what considered as capital expenditure. Legal charges paid for drafting the memorandum and articles of association, MOA and AOA, or brokerage paid to the brokers, commission paid, etc., etc. One useful way for recognize, देखो, some example: purchase of land, cost of leasehold land and building, cost of purchase goodwill, preliminary expenses, cost of addition or extension, cost of overhauling, expenditure of putting an old asset into working condition, cost increase the earning capacity of the business. What are the rules for revenue expenditure? Any expenditure which cannot be recognized as a capital expenditure will be known as revenue expenditure. Revenue expenditure will be giving benefit for short term. It will be recurring nature. This will be not increasing my earning capacity. It will be only helping me to generate revenue. Expenditure for day-to-day conduct of the business, the benefit of which is less than the 1 year. Examples are wages for workmen, interest on borrowed capital, rent, selling expenses and so on. Expenditure of consumable items like raw materials, office stationery and etc., etc., salaries, rent, electricity, all these are revenue expenditure. Expenditure incurred for maintaining fixed asset in working condition, it is also a revenue expenditure. Salaries and wages, rent and rates, depreciation, consumable stores, inventories, insurance, taxes, legal expense, miscellaneous expenses. Now there are certain expenditure. The next point is very, very, very important. There are certain expenditure which are of nature of revenue nature, but we have to treat it as capital expenditure. Sir, we don't understand. Can you repeat again? There are certain expenditure which are of revenue nature, but we have to treat at which nature? Capital nature. There are certain expenditure which are of revenue nature, but we have to treat as capital. The first one is repairs. If we have incurred some repairing expenses, huge repairing expenses on some asset, due to which the asset has been bring in the business into working condition, it will be a capital expenditure. I have purchased an old machinery which is not in working condition. I have made some repairs, due to which the asset is in working condition, then the expense of repairs will be capital expenditure. Wages are normally revenue nature, but wages paid for installation of machinery. For installation, I have paid wages to the employees. So that time the wages paid will be which expenditure? Capital expenditure. Preliminary expenditure, all the expenses paid in the process of formation of a company should be treated as which expenditure? Capital expenditure, and recorded in the balance sheet asset side. Brokerage, government, stamp duty and legal expenses. Whenever you purchase a property, you have to pay brokerage, government, stamp duty, legal expenses. All these are one-time expenses and it is treated as capital expenditure. Raw material and store. Example. Here the example is very, very, very important. What happened? I have furniture store of myself. I am owning a furniture store. I want to make some showcases for the business that can be utilized to show different furniture material to the customers. So I have consumed the raw materials available in my store. So that time the expense for raw material will be which expenditure? Capital expenditure. Very, very, very simple. Development expenditure. All expenditure that are incurred for the development of mines, plantations should be treated as what? Capital expenditure. Many times what happen? You have to do some expenditure for development of mines. Mines, you do mining, digging out the minerals from the land, gold mining, oil mining, all these are the expenditure done for development of the land is known as capital expenditure. Now one thing is, there is expenditure known as deferred revenue expenditure. Which expenditure? Deferred revenue expenditure. It is a combination of both. Deferred revenue expenditure is expenditure for which payment has been made or liability has been incurred, but which is carried forward on the presumption that it will be benefit over a subsequent period of time. Guidance note on terms of issue in the financial statements by ICAI. Deferred revenue expenditure are the combination of capital and revenue. Dash expenditure are combination of capital as well as revenue. Deferred revenue expenditure are combination of capital and revenue which does not expire in the year of occurrence but generally expire in near future. It means that deferred revenue expenditure are expenditure which are not expiring in the year of occurrence but they are generally expiring in near future. This type of expenditure are carried forward and write off in future accounting period. A portion of such expenditure is capitalized even though it is revenue in nature and also referred to capitalized revenue expenditure. Very, very, very important. Deferred revenue expenditure are the expenditure which are the combination of both capital as well as revenue. They are combination of both capital as well as revenue. These are the expenditure which generally does not expire in the year of occurrence but generally expire in near future. It means that it has been not been expiring in the first year but it will be expiring in 15 months, 18 months, 24 months. Examples for deferred revenue expenditure are heavy advertisement included prior to the launching of new product, development expense of a new product. You have know with an example. Hope everybody has been listened to smartphones, that is Vivo and Oppo. I hope so. Earlier, there were people knowing only limited phones. The one phones, a common phone, Samsung was known. But in the year after 13-14 or 14-15, people get to know about Oppo and Vivo because they have launched a new product, and when they have launched a new product, they have make a heavy advertisement on the same. Have you observed anything? IPL, Indian Premier League cricket was sponsored by Vivo. They were launching a new product in the market. Oppo, T20 Cricket World Cup was sponsored by Oppo and many advertisement, and in every store you will be getting a big banner of Oppo as well as Vivo. They have hired superstars like Ranveer Singh, like Deepika Padukone for the what? Advertisement purpose, because they were launching a product. Now they don't do so much heavy advertisement because the product has been launched in the market. People know that if there is Samsung, if there is iPhone, there are also Vivo and Oppo. The most important thing, heavy advertisement for launching a new product, development expense of a product are known as deferred revenue expenditure. Out of the total deferred expenditure as a part, a portion benefit consumed during the year is write off and record on the debit side of income statement, while the unwritten portion appears in the balance sheet. It means that the amount which is utilized in the current year will be shown in the income statement. For example, I have do the expense of 10 lakh, but only 2 lakh is for current year. 2 lakh will be in the profit and loss, and rest remaining 8 lakh will be in the asset side. Note, after the issuance of AS 26, that is accounting for amortization, the expenditure which are recognized as deferred revenue expenditure has to be treated as what? Simple revenue expenditure. It means that any expenditure you have classified as deferred revenue expenditure, you have to treat as simple revenue expenditure. The accounting standard has specifically mentioned that any expenditure incurred for research, training, advertising and promotional activities should be recognized as expense of the accounting period in which it has been incurred. It is known as amortization. AS 26, after the issuance of AS 26, all the expenditure which are classified as deferred revenue expenditure should be treated as revenue expenditure. After the issuance of AS 26, it has been noted that the expenditure incurred for research, training, advertising and promotional activities will be recorded in will be treated as which expenditure? Revenue expenditure. Now let's go ahead. The next one is capital and revenue receipts. We will be also solving the MCQs. Do not worry, bachche log. Do not worry, students. We will be also solving the MCQs of each unit 1.1, 1.2 and 1.3. I will be taking an MCQ session. Once you have done with the basic parts, once you have know with the concepts, then we can go on the MCQ part. Now, there are receipts of two types. That is capital as well as revenue. The receipts which are non-recurring in nature will be capital receipts. The receipts which are recurring in nature will be revenue receipts. Sir, some example. Normal example. I have sold an asset. So, I will be not daily selling the asset. Sale of asset will be which receipt? I will be getting money now. So sale of asset will be which receipt? Capital receipt. Payment of salary. Sorry. Rent received monthly. I have been receiving rent monthly. If I have received monthly rent, it will be which receipt? Revenue receipt, because it is recurring in nature. And the capital one is non-recurring in nature. Over here, a receipt of money may be capital or revenue. A clear distinction therefore should be made between capital receipt and revenue receipt in order to determine the correct result of operating performance of an entity. Capital receipts refer to those receipts which are obtained by the entity from operations other than the regular operations of the entity. Sir, any examples? Now, I have been providing you coaching. So the money you pay to me is my revenue receipt. But I have sold my motor car. I have sold my new motor car to Mr. Chaitanya sir, CB sir. I have sold some goods to Akash sir. I have sold some goods. It will be my revenue receipt. But when I sold some other than goods, that is my motor car to CB sir, it is a capital receipt for me, and sale of goods will be revenue receipt. So the receipts we generate from our regular operations is revenue receipts and the receipts we generate from other than revenue, it is known as capital receipt. Simple. Selling an asset, a capital receipt. Selling of goods is a revenue receipt. Receiving rent, a revenue receipt. Capital receipt does not affect the profit. MCQ. Which receipts does not affect the profit? Capital receipt does not affect the profit earned or loss during the course of year. Capital results can take for one or more of the following: additional capital introduced, proceeds from sale of long-term asset. This all are which receipt? This all are capital receipt. And sir, what do you mean by revenue receipt? I will be going to revenue receipt also. A receipt of money is considered as revenue when it is obtained by the entity in the regular course of business operations. Now my basic course is giving coaching to students. So the receipt I generate is revenue receipt. Other than this, any income, any receipt I have generated, it is capital receipt. Receipt of money in the revenue nature increases the profit or decreases the loss of the business and must be set against the revenue expenses in order to ascertain the profit for the period. For example, collection from customer for goods sold on credit, fees or services, fees received for services rendered. It means that when you have basically when you have do something in your regular course, it will be revenue receipt. For example, when you will become a cost management accountant, CMA, you will be giving services. When you will be giving services, listen to one important thing. When you have basically given some services to your client, you will be taking money, that will be your revenue receipt. You have purchased and shares of Reliance company of 5 lakh rupees. You have hold it for 5 years. Now you are selling it. It will be which receipt? Capital receipt. Capital receipt are credited to the respective account of capital nature and get reflected in the balance sheet. It means that capital receipts are shown in the balance sheet. On the other hand, revenue receipts are recognized as income and are reflected in the income statement. Revenue receipts in the income statements and capital receipts in the capital statements. The both points are very, very, very important. We have now studied which points? The first one is capital and revenue transaction. Then we have gone on capital receipt as well as revenue receipt. Capital receipts means which are of which nature? Non-recurring nature. Other than the ordinary course, it will be which receipt? Capital receipt. And in normal course of business, it will be revenue receipt. I have given you the example. Sale of goods, revenue receipt. Sale of asset, capital receipt. Receiving rent, revenue receipt. Sale of investment, which receipt? Capital receipt. Not in the ordinary course of business. Owner has bring some additional capital into business. It is a which receipt? Capital receipt. It is not a revenue receipt. I hope you have been understand. Again, one more homework for you. You have to read this. Okay, what do you mean by capital and what do you mean by revenue receipt? Now, let's go. Last point of the chapter, that is capital and revenue profit. Capital and revenue profit. Capital and revenue profit. Very, very, very important. Just focus on the example. You will be getting everything about capital and revenue profit, because many students have confusion. Okay, what is capital profit and what is revenue profit? Example. I have asset of 5 lakh rupees cost price. 5 lakh rupees cost price. Book value is 3 lakh. What do you mean by book value? Cost minus depreciation. The book value of the asset is 3 lakh because I have used the asset for 2 years, 3 years. the asset values goes down because we have done wear and tear of the asset. 4 cases. If asset sold for 2 lakh 80. Now over here what happened? The cost price is 5 lakh. Book value is 3 lakh. If the asset is sold for 2 lakh 80,000, there will be a loss. Revenue loss of 20,000. It will be which loss? Revenue loss. Sir, why not capital loss? Because we have sold the asset. Beta, the most important thing which you have done over here, you have watched the book value. Capital loss arises when the asset is completely destroyed by fire. Here, I have sold the asset below the book value. If asset sold for 4,50,000, it will be revenue profit. $1,50,000. If asset sold for 4,50,000, revenue profit 1,50,000. Now one more thing. If asset sold for 6 lakh, if asset is sold for 6 lakhs, over here 2 things will be happening. What is the book value of the asset? 3 lakhs. I have sold it for 6 lakhs. Total profit will be how much? Total profit will be 3 lakhs. Total profit will be how much? 3 lakhs. In 3 lakhs, there will be 2 parts. First, get to the book value. From 3 lakh to 5 lakh, it will be 2 lakhs. Revenue profit. And how much you have earned extra from the cost? 1 lakh. 1 lakh will be a capital profit. So I have explained 3 points over here. If asset sold for 2,80,000, revenue loss 20,000 because you have sold less than the book value. If asset is sold for 4,50,000, it means that you have sold the asset more than its book value but less than its cost. So it will be revenue profit. If asset is sold for 6 lakhs, total profit is 3 lakhs because the asset book value is 3 lakh, you have sold it for 6 lakh. 6 lakh will be 3 lakh will be your profit. Out of 3 lakh, 2 lakh will be your which profit? 2 lakh will be your revenue profit and 1 lakh will be your capital profit. The last one. Asset is completely destroyed by fire. If the asset is completely destroyed by fire, over here what happened? If the asset is completely destroyed by fire, there will be loss of 3 lakh and it will be which loss? Capital loss. Because we have not recovered anything. The asset is completely destroyed by fire. Here, these are the 4 cases. I hope so every student has been note down these points in your notebook because it is very, very, very important. 5 lakh cost price, 3 lakh book value. I will be writing over here full. If asset sold for 2,80,000, revenue loss 20,000. If asset sold for 4,50,000, revenue profit 1,50,000. If asset sold for 6 lakh, profit 3 lakh. Out of 3 lakh, 2 lakh will be revenue profit, 1 lakh will be capital profit. If asset is completely destroyed by fire, loss will be 3 lakh rupees of capital loss. Just note it down in your notebook because from this example only, you will be getting everything what is to be done and what is not to be done. Chalo. Let's go ahead. I hope so everybody is done with this over here. While ascertaining the operating performance of an entity for a particular period, a proper distinction should be done between capital and revenue. If profit arises in the ordinary nature, begin the outcome of the ordinary function and object of business, it is termed as revenue profit. But when a profit arises out from a non-recurring transaction, it is termed as capital profit. Generally, capital profit arises out from the sale of asset other than inventory at a price more than its book value or in connection with the raising of capital or at the time of purchasing an existing business. Example of capital profit: profit prior to incorporation, premium on issue of shares. It will be understandable to you when you have studied group 2. In your intermediate, you will be getting know about premium received on shares, profit made on reissue of forfeited shares. Revenue profits are profit on sale of goods and services. Normally, capital profits are transferred to capital reserve, while revenue profit are distributed to the owners or recorded in the profit and loss account. Same. Capital and revenue losses. This one more paragraph, I have already explained you what is capital loss and what is revenue loss. So you can understand a very good way in this example how to classify it is a revenue profit or it is a capital profit. Let's go ahead. Now we'll be solving with the MCQ one. We'll be starting with the MCQ part. Just give me a second. Now we will be solving with the MCQ of capital and revenue transaction. I will be recording one more session in that. MCQs of 2 chapters, that is 1.1 and 1.2. It will be interlinked. Only one PDF will be available to you. That is fundamentals as well as frameworks. Capital expenditure. Car purchase for sale. It is a revenue expenditure, not to be considered. Machine purchase for business, consider. Road tax and insurance premium of delivery van, or road tax and insurance premium of delivery van. Which one of the correct? It is correct second and third. Option number B. Purchase of goodwill, it is a which expenditure? Capital expenditure. The loss suffered by the business in the ordinary course of business, it is called as revenue loss. True. It is called as revenue loss. Ordinary course of business. Now, which of the following is a revenue? Purchase of truck, capital in nature. Sorry, revenue, capital in nature. Purchase of truck, yes. Wages paid for installation, yes. Road tax paid, yes. Answer will be all of the above. Which of the following are capital expenditure? Delivery of fixed asset, installation of fixed asset, improvement but not repair of fixed asset, all of the above. Rent and rates for a factory or office premises is an example of rent you have to pay recurring basis, so it will be a revenue expenditure. Cost of goods purchased for resale. The main purpose is resale. It will be a which expenditure? Revenue expenditure. Which one of the following should be considered as a revenue expenditure? 100 paid for execution of new plant, capital. Loss of 10,000 incurred for increasing the seating capacity of an hotel. No. Damage paid on account of breach on contract on supply of certain goods. Option number C. Machinery purchase, capital. Which of this expenditure would be treated as capital expenditure? Acquisition of asset, extension, not be treated. It is a capital expenditure. Extension, capital. Improvement, capital. Maintenance, revenue. Because maintenance, it will be a revenue transaction because it will be repairs and maintenance again and again. Import duty of raw material purchase. We have purchased raw material and the expense of raw material are of recurring nature. Answer will be revenue expenditure. Which of the following is revenue expenditure? Raw material purchase, plant purchase, wages paid on installation of machinery, raw material purchase. Depreciation on fixed asset. Now only we have studied it is a which expenditure? Revenue expenditure. All sum spent up to the point of asset is ready to use should be treated as which expenditure? Capital expenditure. Dash is that expenditure which result in acquisition of asset or which result in increase in the earning capacity of the business. It is known as capital expenditure. The expense which will be increasing the earning capacity will be of capital expenditure. Amount paid for wages, salary, carriage, repairs, rent, etc. are terms of revenue expenditure. Expenses whose benefit expire within the year of the expenditure and which are incurred to maintain the earning capacity of the existing asset. Within the year of expenditure, it is known as revenue expenditure. The benefits of capital expenditure last for a long period of time. Very, very, very important question. Nice question. Expenditure incurred in normal course of business and whose benefit expire within the year. It is known as, firstly, whose benefit expires within the year. It is known as revenue expenditure. No. While dash is an expenditure which result in acquisition of asset, revenue as well as capital. Read the option, then only give the answer. Answer will be D. Revenue expenditure are balanced and is transferred to. Revenue expenditure are transferred to the what? Debit side of profit and loss account. Which of these are recurring in nature? Revenue. Amount received from sale of asset or contribution made by the proprietor towards capital from the business are known as capital receipts. Dash is the outcome of a firm activity in accounting period, part of its rewards for offering goods or services to the public. Dash is the outcome of firm activity in the accounting period, part of its rewards for offering goods and services. It will be which receipt? Revenue receipt. Which of these are the capital receipt? Contribution in the business, capital receipt. Loan taken from the bank, yes, capital receipt, because we will be not taking loan again and again. Amount received on issue of share capital, yes, only once, all of the above. Which of the following are not capital? Receipt from sales are revenue, fees received from services revenue, interest on investment revenue, all of the above. A building was purchased for 1,50,000. Subsequently, it was sold for 1,75,000. Now the cost price is 1,50,000 and the selling price is 1,75,000. The difference is 25. It will be a which profit? Capital profit. Because you have sell the asset more than its cost price. Which of the following expenditure are of capital nature? Cost of making more exits in cinema hall, freight and cartage amounting to 4,000 were paid on purchase of new plant and a sum of 2,000 was paid for erection of that plant. Spend of 2 lakh on overhauling, it means installation of the machinery which improve the capacity utilization and save running expenditure of 15,000. Answer will be all of the above. Which of the following expenditure are not capital expenditure? Minor repair, it is a revenue. 2,000 paid for municipal tax in connection with the building which was purchased last year. Temporary room was constructed for storing raw materials. Which of the following are not capital expenditure? It is a capital expenditure. Municipal tax, building, capital expenditure. Answer will be A. 30,000 spent for repairs of machinery. Other two will be capital expenditure because municipal tax we have to pay only once when you purchase the asset. Which of the following is deferred revenue expenditure? 30,000 spent on heavy advertisement. Okay. Temporary room, option wall, heavy advertisement, deferred revenue expenditure. Which of the following expenditure are not revenue expenditure? XYZ property dealer purchased 10 land, revenue. 20,000 spent for trial run, capital. Damages paid, option number B. Cost incurred to acquire dash, but acquire an asset are capital expenditure, but cost incurred to them keep them in the working condition. तो पहला वाला capital, दूसरा वाला revenue, option number A. Here I have completed 30 MCQs of capital revenue and I finished the topic with a very good explanation of all the MCQs. So I hope so each and everybody has been getting the MCQs. I have given the MCQs. The link of the MCQs will be available in our WhatsApp. To kindly join the WhatsApp group that is available in the description box. Each and every student who are watching this lecture, do join the WhatsApp group, because in that we'll be providing many things for your CMA foundation upcoming exams, which will be helping you to clear the exams. And if you have enjoyed this video and it will be if it has been giving you a benefit, to do like the video, do share with your friends, and do subscribe and stay updated for more updates. Till then, everybody keep studying and all the best for the exam. Bye bye, take care.